Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar. I am back from the mountains, baby. Vacation time is over, and I see you guys has had some movement last week. But you know, we got to talk about a couple of things. A, let's talk about gold. Gold, October gold, not Q now, not Augie. We're talking about V, ZGV7. October gold has leg 1 and leg 2 of a mirror image. Looks exciting to me. I'll throw up a chart in a few moments and I'll show that to you, so keep an eye on the October gold. B, the market, talking now about S&P and NASDAQ, has moved higher, and NASDAQ made new highs, but on very low volume, guys, on low volume. And if you remember in my last video, I had mentioned that the Fed had fed the bull. The FOMC fed the bull by not touching rates, and we should have rallied for new highs. And it didn't happen during 2 weeks ago. It happened last week during a vacation week, or during a major holiday right in the center of the week with very low volume. So that gets a little tricky up here, but the new highs were set. So hey, we got the new highs. S&P didn't do it yet. NASDAQ did. I'll put up a chart to show you that. NASDAQ also has a weekend rule trade in effect. If you guys remember the weekend rule, and I'll read this to you right out of the Oscar archives here. The weekend rule: always go long on Friday afternoon if a market is settling at or within 5% of contract highs on a Friday. You expect new highs on a Monday. It will happen 98% of the time. Weekend rule, that's what we call it. You guys have heard it before. It happened in the NASDAQ. On Friday, boom, we traded up for new highs. So again, we'll look at that chart. In fact, I'm going to go to the charts now. I'll throw a few charts up. We'll talk about a few things, and I'll come back and tell you what I'm going to do in the S&P for tomorrow. So let's take a look at the charts, and I'll be right back to you. Here's the gold chart, leg 1 and leg 2 of a mirror image. Boy, I like it. I hope we get what we're looking for. Keep in mind, though, that gold is rolling over from August, which is Q, to October, which is V. In fact, on the floor, there used to be an upside-down V with a line under them, so you couldn't get it wrong. So remember, we're rolling over from Augie gold to October gold. This is an October gold chart. You have a market on Thursday. We rallied, dropped, settled. The next day, we opened, we dropped, rallied, and settled. Almost the same exact highs and lows, almost exact opposite opens and closes. That, my friends, is leg 1 and leg 2 of a mirror image. Leg 1, leg 2. Now, leg 3 should come in tomorrow, and the likelihood is that you'll get a market that'll open, drop a little bit in, and then take off to the upside. If that happens, that's leg 3, and we become bullish. If, in fact, it opens and drops down and settles lower, then we have a bearish mirror image, so we have no signal till at least tomorrow comes in, and we settle either above or below leg 1 and leg 2. So let's hold off on the gold trade for now, but we got something brewing in gold, so keep your eye on the gold. The S&P chart, as you see, the Fed didn't touch rates. The market started to rally, but we have failed to make new highs. Look at that right now. We did not make new contract highs. The market it did rally up into the 40s, but it did not go to new contract highs. And we expected, after the Fed did nothing with interest rates, a good, strong market will rally to new contract highs. But we did have a holiday week. It makes things a bit strange. Volume was light. The S&P did not get there, but it still does look bullish at this point in time. We have to queue off the NASDAQ because the S&P has not made the new highs. The NASDAQ has. I'm going to show you that chart next. Keep this in mind. You have a high, you have a lower high, and a third lower high. We need to pull out and make another high, a higher high than this last one. And if we do not, we'll have to look at this market. However, you heard me mention in my video right before I went on vacation that we'll turn bearish if, in fact, NASDAQ doesn't pull up and make new contract highs. It did, so I can't turn bearish. Thankfully, I'm not going to be in the bear camp because I don't want to be in the bear camp. But I would have if NASDAQ didn't pull ahead. Tells me likelihood is the S&P will pull ahead next. Since the FOMC, boom, look at NASDAQ. Up, up, and away. These were contract highs. We blew them out. No trouble at all. That thing took off and made all-time forever highs in the NASDAQ. Go NASDAQ, nice and bullish. You gotta love it. I hope it takes the S&P with it. But we did get the new contract highs, and thankfully I will not be in the bear camp like I said with that last chart. I hate being a bear. I've been an eternal bull for years. But hey, I will turn bearish if the market gives us the signal. So I wanted you to see that. Look at NASDAQ. What a bull ahead. That was a fantastic move. Again, though, it happened off a very low volume. I'm talking a third of its usual volume is what we've seen when they pushed it ahead. So is it real? You know, traders, I don't know. The way I trade for the last 25 years, I don't know if that's a real high. It happened during a holiday week. So let's see what Monday has to offer us. So you seen the charts? That mirror image in gold, hey, that's a beautiful leg 1 and leg 2. You gotta love it. Who knows where it's going to go with rollover coming. Let's see what the mirror image gives us. I'm going with the signal right out of that mirror image. Now, you've seen the NASDAQ chart, and the NASDAQ actually did go up and make new contract highs and settled at all-time contract highs on a Friday, enacting the weekend rule. Let's see what happens. The weekend rule did come in effect in the NASDAQ chart, which I showed you. Again, we settled that contract highs on a Friday or very close to them. You got to go with the trade and expect more coming on Monday. So let's see what we get. Now, for the S&P, which did not make the new highs. Remember, I showed you high, high, and lower high, but it's on its way right now. If the S&P does, in fact, bull ahead, we're going to have a fantastic July, I'll tell you that much. Let's see what happens. For the S&P tomorrow, Monday, 7907, the ESU7 in the mini and the SPU7 in the large. Omni support is in the high 1530s. Remember, ladies and gentlemen, we're making this format change. So instead of giving you an exact point, the high 1530s is where Omni wants to get long. Omni's profit objective for the day is 1553. We're buying a bit of a pullback, trading 1543 as we speak. As of this moment, it's about 11:30 p.m. Eastern. 1543 is our last tick. If we pull down into somewhere in the 30s, Omni's jumping in. I'll shoot out a flash update at a certain point once we're in to let you guys know what I've done. Figure out a good spot for you to get in. Figure out a better spot for your stop to go. It will be a sell stop if we're bullish. You will find a place that is comfortable for you and place your sell stop there. And then if you want to get long, if you believe in my Omni trade for tomorrow, you get yourself long. We're talking somewhere in the high 1530s. So that's what we're going to do to try to capture what we expect is that the S&P will continue on higher and catch up to the NASDAQ, which put in all-time contract highs. Once again, go NASDAQ. I hope the S&P does it. It would be nice to see. There's something else to keep in mind, and this I've shown you guys many, many times. And the only scary thing about this trade is this. The NASDAQ has that beaming new high, and if on Monday you don't get follow through, then we're talking about this. No follow through on Monday means Monday, Tuesday, Wednesday, and then the hook back up. 3 and out. Remember that. It's another one of my Omni Oscar rules. You guys have to be aware of all the rules, and you have to trade all the rules at all times and adhere to them 100% of the time. And that's how short-term traders have a long-term view. By sticking to their guns at all times, and any time you have a trading rule, when that trading rule goes into effect, you work the rule come high market, low market, news comes out, terrorist attacks, stick to your guns, trade your rules, and you will see over time your account should end up on the plus side. So don't forget, very important, you could end up with the 3 and out, but at this point, the market only showed us one direction, and that was up, so let's go with that direction. Okay, ladies and gentlemen, again, it's going to be some tough trading up here until the S&P makes that new high. NASDAQ put one in, S&P must follow. Be very, very nimble with your profits on the long side tomorrow. Markets permitting that we get profits because, again, until S&P makes that new contract high, you can very easily turn down and head down for a few days with the NASDAQ putting in the 3 days and up or 3 and out. Keep that in mind. I will certainly keep you informed. I want to wish you guys the best trading tomorrow. Do me a favor and come to my site. We have been revamping the site. My guys have stayed in this office all week while I was on vacation, and they have been working the site and retooling it. And within just a couple of days, we were hoping to get it ready for today, but a couple of more days, you will see all of the new products that we have to offer and the way that we're going to show the Omni and the opportunities that you guys will have to interact with us. I think you're going to find it pretty exciting. So come to the site, and that's www.livewithoscar.com or futurestraders.com. Either way will get you to the site. You can always, if you're watching my YouTube videos, that is at it's youtube.com/futures-analysts, right? www.youtube.com/futures-analysts. If you're there watching my videos, hit the subscribe button. That will enable you to see the moment my videos come out. Now, again, if you want to see the videos as quickly as possible, once I send them to YouTube, they automatically go to my site, livewithoscar.com. We have all the videos there. YouTube has over 150 videos that I've put out personally. So go there and take a look at some of those videos and see what we got going here, guys. This is a long year coming. Who knows where we're going, but the markets say up. I'm an optimist. I hope we get there. If you'd like to give me a call, ladies and gentlemen, I work these phones day and night. Call me anytime you'd like, and that number is 718-351-2266. And, of course, you can always send me an email, and you can email me at
Oscar@futuresanalysts.com.
Oscar@futuresanalysts.com. Shoot in those emails. I will be spending most of my night catching up on emails, looking at markets, doing analysis, getting back into the groove. You know me, I am 24/7 when it comes to these markets. I missed them. You know what happened while I was on vacation? I'm in the mountains, and I don't want to know anything about these markets. But by Thursday, there I was pacing back and forth. Where are the markets? Where are the markets? I have to know. So I drove off the mountain. I got onto somebody's service, and I downloaded it. I saw where the markets were. I couldn't take it. I had to do it. So even on vacation, I got to know where these markets are. And believe it or not, you guys need to do the same. Even when markets are closed on Sundays, when you're away, you still need to know where they are, where they've been, to figure out where they're going. Now, the outpouring of requests has been unavoidable. At some point, I'm going to have to figure out a way to give you guys the Omni numbers without giving the whole world the Omni numbers. We are tooling the site just for that. So again, there's some exciting new stuff coming in just for that. Stay tuned over the next few days. Remember, stay tuned with that mirror image in October gold. Stay tuned for what the markets will do, because let me tell you something, it's going to get strange up here if we don't get follow through. So you may end up with the 3 and out. I'm very cautious up here, but I am going to take it from the long side, as I told you, in the S&P. Again, I am so glad to be back. I missed you guys. I hope you missed me, but if you didn't, it doesn't matter, because I missed you. And don't forget, I tell you this every video, it is so important, and that is place your stops first. Always place them first. Ladies and gentlemen, you know what I'm saying next, right? It's the end of the video. This happens at the end of every video, and it is a really, really good way to keep your mind set. The mental mindset for trading is a very difficult thing to get under wraps. It takes years and years of mental conditioning before you have it right. But one of the easiest ways to get there is to say this to yourself all the time, and that is, stops are in, emotions are out!
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.